Most beginners look at a chart and see nothing but noise. Experienced traders look at the same chart and see opportunity. Now the difference is simple. They know how to read candlesticks because every candle tells a story. Who's in control, where momentum is building, and where it might shift. So in this video, I'm going to show you how to read that story for yourself. And as you go through these courses, make sure you download that free day trading workbook link below. There's a section in there that walks you through candlesticks step by step. If you can't read candles, how do you know what to trade? We're going to start out with the anatomy of a single candlestick. And there's a lot of information there. I think a lot of people kind of overlook what you're seeing there. So I'm going to zoom in on the biggest stock of the day, UCAR. Pretty crazy. This is why we trade penny stocks. Like just a brief foray back. This was a stock telegraphed the night before. Okay, gapped up on news literally the night before from 60 cents to about $1. Come in basically 16 hours later, and this stock rebroke out. We're going to talk about this pattern for sure, and went from about 102 to, at this point, the highest point of $3.73. This stock is still up 483% in one day. Now, you might be new to penny stocks and think that this is rare. It's not rare. This is an exceptional example. But every few days in this current market, I'm recording in 2026, this happens way more than you think. A lot of people completely miss these, and that's why I'm doing this course. Now, let's zoom in on the candles just to kind of break this down. And I'll talk about this candle here late afternoon when this stock broke out yet again. So you'll see a lot of information here. And as I hover over a candle, I want you to notice right up here underneath the ticker, you'll see all of the information that I'm referencing at the top of my chart. So all of that information that you can see is what price the stock opened at, what price it's closed at, and its highest point in between there. So each candlestick represents a snapshot of time. I like to use 5-minute candlesticks. We'll talk about time frames here in a minute. So each candle on my chart represents 5 minutes in time. Now in this particular candle, you can see it's a green candle, which means it closed that time period higher than it opened. So it opened at one price, closed at another. That price that it started that 5-minute increment in time and the closed at, that second price is higher, so you have a green candle. Now, if we skip over to this candle in after hours, you'll see it's a red candle, and notice the close is lower than the open. Each candle represents one 5-minute period of time, and you can quickly see what that stock did in that time frame. Was it strong? Was it weak? How high did it go? How low did it go? Now, I'll jump over to one of these candles with a wick. I'm just going to randomly pick this candle, and you'll see that there's a different number there. The high price. Now that is different from the close price. Wicks represent the highest and lowest price within that time period. So the highest price it went and the lowest price it went during that 5-minute period. Now the body, the actual candle, represents that opening price and closing price. And now you can quickly see how much volume, what the range of that stock was, and whether it was considered a bullish chart or a bearish chart. Now, the next thing I want to focus on is zooming out to multiple time frames. A lot of people zoom in way too much. I see people looking at just a couple candles, and it drives me nuts. You really need to zoom out to get the full picture. So that's where I like to use multiple time frames. So my zoomed in, like where I'm placing trades, zoomed in at the highest level is the 2-day 5-minute chart. So I'm looking at a 2-month increment or 2-day increment of time. You can see I have yesterday and today, and each individual candle is broken up into 5-minute increments. So now I can see what the stock did yesterday, what it's doing today, and zoomed in. Now, a lot of people, especially newbies, like to use 1-minute candles. I do not recommend that. I actually steer people away from that. I think you get faked out, you get shook out way too often, and you kind of hallucinate to a certain extent. You see something that really isn't there. I like to zoom out to 5-minute charts, and I'll tell you this, started trading 20 years ago, I've made every mistake in the world 1,000 times, but I learned from those mistakes. And I remember it's probably about 15 years ago. It took me a while to recognize that the zooming in too much, those 1 minute candles, I mean, they even have 30 second, they even have 1 second candles. It was just zoomed in way too much, and it was kind of affecting my emotions. Once I switched to 5, I got more consistent, and I wasn't panic buying and panic selling all the time. So the next time frame that we use, the next level zoomed out, is the 2-month, 15-minute chart. So now I can see a 2-month snapshot of time, what this stock has done in the past. Notice this stock ran literally a couple weeks ago. I mean, look at that massive move. So that's why we track these former runners, as we call them. Stocks that have ran in the past tend to run in the future. Look at UCAR today. Then the last is we want to look at the big chart, as I call it, and that is the 1 year, 1 day chart. Now, the previous 2 charts are what we call intraday charts. So we're zoomed in, looking at each individual candle through the day based on the time frame. In the 2-day chart, it's 5 minutes. In the 2-month chart, it's 15 minutes. Now, with the 1 year, 1 day chart, each candle represents the full day. So we can see the full range that stock had over a previous, any one individual day over the past year. So we look for those big runners. History doesn't repeat, but it rhymes, and it allows us to spot stocks like UCAR that have put in these massive moves. We know they have the potential, and they're good to trade. So charts are like a language, and like any language, you'll get better the more you read. Everyone always kind of asks for the cheat codes on learning charts faster. I tell them, look at charts till your eyes bleed. Now that's kind of an exaggeration, but it's pattern recognition. What we're doing with charting is 100% pattern recognition. And how do you recognize a pattern? You look at a lot of examples. The more you read charts, you're gonna understand and grasp them much better. So in the next video, we're gonna go through adding the next layer of the indicators that actually matter and the dozens of indicators that don't. And I want to remind you again, test your knowledge. Grab that free workbook and make sure you fill it out.